Hi everyone and welcome back to my Forex channel. So in this session I will show simple but effective way how you can catch some pips in Forex trading. As simple as they may sound, any type of strategy, no exam for this one as well, there is a few critical things that must be present for this chart pattern. The double top pattern is a bearish reversal trading pattern that kind of emerges at the end of the bullish trend. This type of pattern is composed of two consecutive peaks with approximately the same heights, and we also have a neckline who is acting as a support for those peaks. So this information is very important for you to listen or make a note if you actually need to, because it will help you to identify them in your trading. So the first peak of double top occurs when the bullish trend finds a horizontal area of resistance and then price retraces until it finds support, and that's a neckline of this pattern. And the second peak occurs when the price shoots back to the resistance which was created earlier by the first peak. It fails to break resistance zone and falls down to the neckline again. I know it might sound like cosmos, but believe me, once you will practice, you will be able to identify with no issues at all. But if you still have any questions for me, email to my space station, either to my Instagram or my email address. You will find all the information down below. So the double top chart pattern can be found in all the time frames and in all currency pairs, so it's really up to you which one you like the most and which one is more convenient for you to trade on. And my honest advice to you, once you will spot double top, make sure you have all the right setup. I mean, everything is lined up. So we have a first top, second top, which can act as a resistance, and we also have a neckline which can act as a support. So the first step is to identify the direction of the market. Double top needs an uptrend, and because it is a reversal trading strategy, that is why uptrend is very important. Otherwise, we will end up trading just a ranging market, and this is what you actually want to avoid. Euro USD 1 hour chart, we have a bullish uptrend because of multiple rejections in the past. We can also open up a higher chart to confirm it. So here is the Euro USD on 4 hour chart. The market is still trending towards the upside, clearly showing the buyer's pressure. Back on the 1 hour chart, we notice that we do have a well-defined neckline support and a clear M-shaped formation because of double top at a pretty same height. So what do we actually need and how to confirm entry using double top method? And that's actually the funniest and the most exciting part, because this is where the actual action is going on. And as you know, sometimes trading is not that funny at all, especially if you're having a hard time when you're trading. But you know, let's just keep a positive mindset, let's just have some fun on the charts, and let's just make some profits. So the first thing we need is to have a breakout through the neckline support and the retest on that neckline as a new resistance. Because double top is for a bearish action, it means that we would be also looking for a bearish engulfing candle to confirm that entry. So it's pretty much the push and exhaustion scenario. So let's actually play a replay tool on and see what the market got for us. As I said, we're just waiting for the break and retest through our support zone, and as you can see, we do have a break through our neckline, and as I said, we are just waiting for the retest on a previous area of sensitivity, which will be acting as a new resistance. So as you can see, the market is fluctuating, respecting our new resistance zone. I'm just waiting for this lovely bearish engulfing candle where we can enter short. So as I mentioned before, I like those push and exhaustion moves to previous area of sensitivity because they definitely will secure my entry. So as you can see, push, exhaustion, previous area of sensitivity, support is now acting as the resistance, and we have a price action confirmation with a nice bearish engulfing candle. So what about the stop loss and take profit levels? Well, the best and most efficient way of finding it is basically use a simple price action levels, or you can also use a price range tool to measure it, and don't worry, I will show you how you can do that. So to find a measured move, or being more specific, to mark your stop loss and take profit levels, all you have to do is you take the distance from the double top resistance to the neckline, and after that you have to project the same distance from the neckline towards the downside. But more than likely your stop loss should be above the neckline. If you're using a TradingView platform, basically you can grab a price range tool and basically drag from the top to the neckline, and as you can see, from my top to the neckline I have 63.6, and once you count it, you're basically dragging from your neckline towards the downside. And in regards to your stop loss as well, it can be above of your neckline, or you can use the price action. So as you can see, this was a recent area of sensitivity, so you just can basically mark it over there. So let's play a replay tool on and basically see what the market got for us. And as you can see, we reached our goal that we measured, but you can notice that the price still continued to go lower after meeting our measured zone, and that's why you should use that way to measure as your take profit 1, and that's a great tool to measure for it. And once your TP1 reached, then you can seek for TP2. You can move your stop loss to an entry, and then we are going for TP2. But don't forget, guys, to manage your risk accordingly based on the spread fees you may be paying to the broker, or basically on the money you can afford to trade. And using this double top strategy, I don't know too many traders who will be complaining about 124 pips in profit. So if you enjoyed the video, smash like and comment down below, and until next time, bye!